Hello and welcome back to Momentum Investing Club. Today is 10th of September and I'm back with next video on a Momentum Investing series. So today we'll talk about the concept of position sizing in a momentum portfolio. Last video was about rebalancing, I believe, and yeah, this is an iteration to that. So let's start with how much exactly is required. So let's say you run a momentum strategy and you filter out stocks as per the ranking. You have all the stocks ranked from 1 to 400, 500. Now, what is the exact parameter and how will one decide how many stocks should one own? Should it be 10 stocks of those top 500 or 20 or 15 or 30? How does one determine that number? Today we'll go over that. So let's just go ahead with an example. Let's say I want to invest 100 rupees. First option is I select with top 20 stocks of the rankings, which means I'll allocate approximately 5 rupees to each stocks. And second option is let's say I'll invest in 10 stocks out of those 500. In that case, I'll allocate 10 rupees to each of those stocks. So these are just arbitrary numbers of 20 and 10. You could choose 15, 30, 35, 50, whatever. But to give you an idea that these are the possibilities, let's just say, would you choose option one or two? Now, the clear answer to that would be it would depend upon the type of stock that you're buying, the underlying stock universe, the underlying segment that you're buying into. Here's what I mean. So if you're buying volatile stocks, which means they are more susceptible to price swings and there's a lot of noise or chaos in them, it makes sense to diversify that portfolio over a range of stocks and not be limited to a low number of holdings so that your risk is, I would say, equated over a wide range of stocks. Whereas if the stocks are less volatile, you could keep the number down since the price swings are low and you wouldn't see major price movements in it. So that's a basic idea behind choosing number of stocks in a portfolio. So here's what I usually do. Uh, in a small cap and mid cap portfolio, which is the universe of 400 stocks, I choose the 20 best out of them. And let's say for the Nifty mid small cap 400 index, of those 400 stocks, I'll choose the top 20. Uh, in terms of the large cap, which would be the Nifty 50 or the Nifty Next 50, also called Nifty Junior. For each of these 50 stocks, I would choose the top 10 of them. So basically, in the first case, I've spread my risk over 20 stocks, whereas in the next one, I've spread it only over 10, since it makes sense to stay accumulated on those 10 stocks. Now that the number of stocks is finalized, there's an additional parameter that one could look at is how much to allocate to each of these stocks. So should it be, this is just what I mean exactly. So there are two main types of allocations. One would be an equated portfolio, and second is the risk parity based portfolio. So what exactly this means is in an equated portfolio, if you were to invest 100 rupees in 20 stocks, it would be distributed evenly among all of them. So 5 rupees each in all of the stocks. Whereas in terms of risk parity base, you would look at some indicators, filters to find out which stocks are more volatile, which stocks are more expensive, different kind of filters one could choose from. But what this exactly means is there's an additional filter where you punish stocks for their volatility or expensiveness, and according to that, you choose the position sizing for them. Let's just say there are two stocks in a 20 stock portfolio. There's Zomato and there's Vodafone. Let's an example. So let's say Vodafone is very volatile and price swings are 5% daily, whereas Vodafone is volatile, but the price swings are just 2%. In that case, the position sizing will be reduced for Zomato and it would be on the higher end for Vodafone. So that's the case for risk parity based. To keep it simple, my portfolio does not look at risk parity-based portfolio allocation. I keep it simple and keep it equated. Since I've already chosen the right stock universe, and my ranking is based upon the index. So for small cap index, I've already made sure there's only small caps. So no point again punishing stocks for being volatile. So that's it. Here's a quick rundown of what position sizing is in momentum investing. Up next, I'll go over how to exit stocks in momentum portfolio. One of, if not the most important part about momentum investing is the exiting factor. If you like this content, you can check out momentuminvesting.club, where I share other model portfolios which I personally created and invest in. That's it for today. Thank you. Bye bye.